Be Wealthy and Smart, episode 1170.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about where millionaires and possibly even billionaires are going to be created this decade. Now, recently I was talking to a friend, and I have to admit, I was rather taken aback when they asked me if I still felt that crypto was going to create enormous wealth. The reason I was taken aback is because I actually took a lot of time to write a book about it so that people would be informed, knowledgeable, know exactly where to invest and what to invest in, and why. And yet, someone was asking me that question as if the price of crypto would impact my opinion about its future, or as if somehow crypto going up in value and then pulling back in value changed my opinion about the technology. Well, I'll tell you, I was really dumbfounded because I thought I had done a good job of explaining the technology and explaining the disruptive technology process that blockchain is bringing and how exciting our future is because of technology. Not because of crypto scams or crypto scam artists or because of speculation, which unfortunately is part of the crypto world, but it's a part that we don't have to be a part of. It's a part that we don't invest in. It's a part that we don't have to have anything to do with. We didn't invest with FTX. We didn't have anything to do with Sam Bankman-Fried. We didn't invest in his crypto coin. We didn't use his exchange. None of that impacted what we are investing in. What we are investing in is the technology of the future. Now, the difficult thing is that not all cryptocurrencies or blockchains or technologies are created equal. In fact, there are a lot that I wouldn't have anything to do with. And we've often quoted Brad Garlinghouse, the CEO of Ripple, saying that most cryptocurrencies are not going to survive. And we completely agree with him and believe that to be true. Why? Because there are many that are just there for hype and speculation because they're easy to create. But those are not the technologies that are going to change the world. And the technologies that are going to scale and dominate and be the leaders of the future are the technologies that we want to invest in and that we are invested in. Maybe the right term is blockchain more so than cryptocurrency, or digital asset more so than cryptocurrency, but we're invested in technology businesses. These are businesses with real customers, real revenues. Ripple as a business has 300 international banking relationships. They have XRP as a digital asset that can be used to bridge anything of value into anything else of value, and was predominantly created for the largest market out there, which is cross-border payments. Ripple has $1 billion of cash in the bank, seasoned management, top software developers. But just like back in the internet era when the internet was coming into being, there were lots of companies that were around at that time. Some of them deserved to be in business and became leaders in their field. Others didn't deserve to be in business and went out of business because they didn't have the revenues, they didn't have the clients, they didn't have the technology or the management. Some fell by the wayside because they were hype, and others went on to become Microsoft, Amazon, Google, Apple, some of the most successful technology companies in our lifetime, and more importantly for investors, some of the best investments of our lifetime. That's where we are with these digital assets that we're investing in. Now, technology is known for moving in cycles, and according to the NASDAQ website, NASDAQ being the technology stock market, of course, the cryptocurrency revolution has begun. This is right from their website. It says, it's the end of bad cryptos, just built on hype, and the emergence of strong ones made from world-changing technology. Again, not my words, this comes from NASDAQ. They say, we have strong cause to believe this, including Gartner's hype cycle. It teaches us that new technologies go through 5 phases. And then they explain the 5 phases. 1 was technology trigger. A new breakthrough technology emerges. New companies are born. Early venture capital investors pour money into those businesses, and a small wave of early adopters take advantage of this new technology. The second phase is peak of inflated expectations. Mass media coverage begins. Tons of new companies emerge, all hoping to capitalize on the trend. Everyone starts hyping up the tech as the next big thing, and more mainstream folks begin hopping on board. Part 3 of the cycle, the trough of disillusionment. First-generation products based on the tech disappoint. New companies start to fail. The media talks about those failures. The hype train fades, and new venture capital money comes into the space as sky-high expectations crash down. That's where I think we've just been. The 4th step is the slope of enlightenment. The mainstream media forgets about the new tech, but the companies that remain work to fine-tune it and develop second and third generation products with much clearer value propositions and use cases. And the 5th part of the cycle is the plateau of productivity. The masses begin using the technology, and the companies in the space enter a prolonged period of durable growth. And further, NASDAQ says, the million-dollar question is, what are the best cryptocurrencies to buy today that have enormous long-term upside potential? These are the ones that could help you achieve total financial freedom in a very short time. Again, this is off the NASDAQ website. Then they talk about blockchain, a transformational technology taking shape. Big picture, blockchain allows for disintermediation across all industries. I just want to pause and explain disintermediation means when money flows out of something into something else. For example, banks are being disintermediated. Money is flowing out of banks and into cryptocurrencies. That's disintermediation. Goes on to say it's arguably the most disruptive technology since the internet, and at its core is its centralized and immutable ledger. This ledger enables innately untrustworthy entities to create trustworthy systems, all without the need for any central authority. That's the beautiful thing about blockchain, is it should get rid of all the corruption out there. It should be something that is transparent. We can see transactions, and we know where money went because it's all traceable and trackable. It goes on to say blockchain enables folks to remove the middleman from legacy systems and replace them with a collective ledger. Why would we do that? Because middlemen are often unnecessary profit takers. Yeah, kind of like the banks. They are in the middle. When you send a wire, it takes several days for the money to get there, and the fees are very high because you have a middleman that you have to go through, rather than you being able to send the money directly yourself. So the change that we're going to is for you to have control of your own money and be able to send it anywhere you want at any time of the day or night with very little cost. The NASDAQ website goes on to say there's huge potential underlying cryptocurrency in the blockchain. The applications here are theoretically infinite. One that Wall Street is currently drooling over is decentralized finance, or DeFi. With cryptocurrency, we can create a new era of finance that doesn't involve big banks as profit-taking intermediaries. And DeFi is the future. Then it goes on to say, during the internet craze of the late 90s and early 2000s, the companies that succeeded did something very simple. They didn't reinvent the wheel or create brand new industries. They just digitized what was already working in the physical world. Malls were already working, so Amazon digitized malls and turned it into the digital mall. Movie theaters were working, so Netflix digitized movie theaters and turned it into the digital movie theater. The winning playbook in the dot-com boom was astoundingly simple. Find something that's working in the physical economy and digitize it. So NASDAQ gets it exactly right. Everything I've shared with you here, they are on point about the future technology and where we're going. And one form of digitization can also be called tokenization. Tokenization is the process of putting ownership and other rights onto a blockchain-powered asset. And so far in 2023, some very large corporations are utilizing this technology. Why are they doing this? Because traditional models of buying and selling property or stocks is slow, archaic, and expensive. There are restrictions involved where you can only trade assets during certain hours of the day, and there's slow settlement times, and the costs are pretty high. The co-founder of Sologenic, Bob Ross, says, imagine creating a digital representation of Tesla or Microsoft stock, tokenizing them, and enabling them to be traded 24/7 on-chain, while even allowing investors to trade a fraction of the tokenized stock. Moreover, the costs would be a fraction of what they are now. Instead of relying on the whims of trusted third parties, you have an underlying blockchain that can immediately foster audibility and transparency. He forecasts that the value of tokenized assets, get this, could grow to be in the, quote, trillions of dollars over the following decades. Let me say that again. He forecasts that the value of tokenized assets could grow to be in the trillions of dollars over the following decades. That is why I recommended investing in digital assets. That's why I wrote a book about it, because the opportunity is so phenomenal. I wanted you to hear about it. And the fact that someone asked me if I still believe it to be true, just because we've had prices run up and pull back, is crazy to me. You can't judge future technology and investments just on price action alone. All assets will get overvalued and become undervalued. And that's something that happens with stocks. It's something that happens with real estate. It's something that happens with many things. They can get overvalued and then go in the other direction and get undervalued for a period of time. That doesn't change the long-term prognosis that this new technology is going to revolutionize the world and create massive wealth. So what companies that you've heard of are adopting this technology? Well, for one, Goldman Sachs. In January 2023, Goldman Sachs announced its digital asset platform, and it went live. The platform is using a private, which is permissioned blockchain, known as Canton, built by Digital Asset. They will use it to enable issuance, registration, settlement, and custody of digital assets. Another large company, the German manufacturing company Siemens, issued its first digital bond on Polygon, which has a 1-year maturity. And although the bond was issued on-chain, the proceeds from investors were collected via traditional banking channels. And Siemens spotlighted its efforts, saying the move away from paper toward blockchain would make transactions faster and more efficient. Daniela Barbarossa, executive director of Hyperledger Foundation, said, the tokenization of assets is still underappreciated by many market observers, as they might be focused primarily on the tokens themselves. But tokenizing a wide variety of assets, from equities to index funds to real estate and carbon credits, offers huge potential in terms of not only enhancing transparency, auditability, and efficiency, but also access to people who otherwise might not be able to tap into traditional markets. So again, tokenization is just creating a digital representation of an already existing asset, whether it be real estate, whether it be a collectible, whether it be stocks, bonds, index funds, ETFs, etc. Any asset that exists today can be tokenized. And when you tokenize it, you have a digital version that can be further divided and sold in fractions. That would allow hundreds of people to potentially be able to buy a piece of real estate, for example. That's just one use that's obvious that could happen in the future. Now, what's really interesting is Mark Yusko, who is a respected money manager, is someone who understands why tokenization of financial assets will create massive wealth in our lifetimes. There was a video clip of him on Twitter that went around, and one of the things that he said was that tokenization will create massive wealth. He said, it was the greatest wealth creation opportunity I'm going to see in my lifetime for sure. That was Mark Yusko. Are you getting the picture yet? This technology is bringing massive change, massive value, and it's going to have massive wealth creation. Don't take my word for it, though. Let's look at two billionaire investors who are investing in blockchain, Stanley Druckenmiller and Paul Tudor Jones. Stanley Druckenmiller is a billionaire hedge fund manager. What did he say about cryptocurrencies? He said that cryptocurrencies could have a renaissance if central banks lose public confidence amid their efforts to fight inflation and stave off recessions. Digital currencies could be the scapegoat for the lack of trust in centralized entities. That's exactly what we're going through right now, as the banking system has had some failures of banks and the central bank is losing public confidence. He says digital currencies could be the scapegoat for the lack of trust in centralized entities, meaning money can move from traditional banking areas into digital currencies as people lose trust in central banks. Paul Tudor Jones, another billionaire hedge fund manager who has delivered returns of 20% for about 25 straight years, one of the best investors out there. What does he say about crypto? He said it's hard not to be long crypto, meaning to own it outright, to invest in it. And he plans to increase his exposure up to 5% in crypto eventually, which is about right. I recommend 3 to 5% of a portfolio into digital assets. His first take is that we're seeing intellectual capital move to the industry, similar to what happened in the 90s with the development of the internet. The second one is that the macro conditions of a recession might lead to a rally of assets that were previously beaten down. This is likely to happen when the Fed stops hiking rates. So the combination of a digital world and the macro failures, meaning of the Fed and inflation and interest rates going up, caused by monetary policies worldwide, might lead to a higher demand for Bitcoin and other crypto assets. So some of the wealthiest investors, I've talked about Mark Cuban, another billionaire invested in cryptocurrency, Elon Musk, another billionaire invested in cryptocurrency. These very wealthy people and opportunity finders who have invested well in their lifetime are investing in digital assets. So you might ask, well, where is the opportunity? Where can you get the biggest bang for your buck if you're investing in digital assets? Again, you want to invest in the digital assets that have real businesses, real customers, real cash flow, real utility, real management, and are already having success. We've talked about the messaging standard ISO 20022, which the financial system has already adopted and has standardized how financial information is formatted so that it can be sent accurately and without error. 80% of all transactions of high value in the future will be traveling on these ISO 20022 standard cryptos. That's where I believe the real value is. And what's so crazy is the prices are still in the pennies to invest in these things. So getting in early doesn't mean you have to invest a lot of money. It means you have to understand what you're doing, where to invest, and how to do it. There is somewhat of a steep learning curve to learn how to open an account with an exchange, store it securely on a wallet, and all of that. And if that's something you'd like help with, I can definitely help you in the Be Wealthy and Smart VIP experience. And if you'd like to know more about the Be Wealthy and Smart VIP experience, check out the special offer in my show notes. So I wanted to share this with you to let you know that my opinion has not changed about the investment opportunity before us. If anything, it's gotten stronger because the prices are now so much better to invest, and the future is brighter than ever. Markets go up and markets go down. That's only short-term noise. In the long term, companies like Amazon have been doing that for years, where they've had major disruptions at least once a year for just about their entire lifetime. The thing is, when the markets are low, that's when you want to get in, and that's when risk is lower. And that's where we are right now. And that's why I feel so very excited about the opportunities that we have before us, because prices are still very good to get invested. The opportunities are better than ever. The winners are getting clearer and clearer and moving farther ahead. And I can't be more excited than having this opportunity to invest in this decade. And I wanted you to know about it. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And all of my podcasting library is on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.